Wall Street's major indexes surged to record closing highs, driven by a rally in technology stocks and anticipation of upcoming earnings from major, megacap companies. The S&P 500, Dow Jones Industrial Average, and Nasdaq Composite all posted strong gains, signaling continued investor optimism in the U.S. equity market. The S&P 500 rose by approximately 0.24% to close at 6,890.95 points, while the Nasdaq advanced 0.80% to finish around 23,827.49 points. The Dow Jones added 0.34%, ending the session near 47,706.65. This move was led primarily by technology stocks, with Nvidia Corporation (NVDA) emerging as the standout performer. Nvidia's shares jumped sharply following announcements that the company will build several artificial intelligence (AI) supercomputers for the U.S. Department of Energy. The company also reported significant bookings in its AI chip business, reinforcing investor confidence in the growing demand for AI infrastructure. This enthusiasm for Nvidia's AI prospects not only lifted its stock but also contributed to broad gains across the tech sector. In addition to Nvidia, investors are focusing on upcoming earnings reports from major technology megacaps such as Apple, Microsoft, Alphabet, Amazon, and Meta platforms. Strong earnings and positive guidance from these companies are expected to validate the market's elevated valuations and sustain the upward momentum. Analysts note that the tech sector has become a major driver of overall market performance, sometimes referred to as the influence of the Magnificent Seven, the handful of mega-cap technology companies whose market weight can move the broader indexes. The rally is also underpinned by macroeconomic optimism. Speculation about potential Federal Reserve interest rate cuts has improved sentiment toward high-growth stocks. Additionally, easing geopolitical tensions and positive developments in global trade have created a more favorable environment for investor risk-taking. However, market watchers caution that the current rally is heavily concentrated in a few large tech firms. While strong performance from these companies drives record highs, it also increases vulnerability. A disappointing earnings report or adverse macroeconomic development could trigger a sharp pullback. Breadth of market participation remains a concern, as gains are less widespread than during earlier, more balanced rallies. Investors are closely monitoring upcoming earnings reports for guidance on AI investments, margin trends, and forward projections. These results will be critical to sustaining the rally. Nvidia's execution on its AI supercomputer and chip orders will also be a focal point, as market expectations for the company have risen sharply. For portfolio strategies, growth-oriented investors continue to see opportunities in AI, cloud computing, and digital transformation trends. Diversified portfolios may benefit from evaluating exposure to cyclicals or value stocks, especially if tech valuations are stretched. Risk management remains key, as setting downside protection or taking partial profits could mitigate the impact of unexpected market volatility. In conclusion, Wall Street's record highs reflect a combination of strong tech leadership, optimism about megacap earnings, and supportive macro conditions. The market is currently betting that major technology companies will deliver robust earnings and that external risks remain limited. If these expectations are met, the rally could continue. However, elevated valuations and concentration in a few key stocks mean that investors must remain cautious, as any negative surprises could quickly change the market's trajectory.